this video we are going to talk about the recent issue of fund closure by Franklin Templeton Mutual Fund. Welcome to FINDAS, a place where you can be financially bindas. This is Samir Machwe and I am going to help you create abundance in your life. On 23rd April 2020, Franklin Templeton Mutual Fund announced the closure of its 6 credit strategy oriented debt funds. The names of these debt funds can be seen on your screen. Now, what does this closure mean for the investors in these mutual funds? First, all the transactions in these schemes have been completely halted. That means one cannot invest, redeem or switch funds from these schemes. Second, all the transactions in all these schemes have been stopped completely. Transactions like SIP, STP or SWP. So the fund manager has basically put these 6 schemes under a kind of lockdown. That is what it means for the investor. Second, we need to understand why did this situation occur in the first place. All of you know that all the world markets across the globe have been going through the problem of the COVID-19 pandemic. There has been a big sell-off in the markets and even the Indian equity market has fallen by around 35%. Due to this pressure, there was obviously a liquidity crunch with the investors and the best place to take out the money from was these debt funds. So what happened is from the month of February, all the investors started redeeming or removing their money from all these funds. And Franklin Templeton Mutual Fund kept on honoring these redemptions. As the equity markets kept correcting throughout the month of March, people kept redeeming their money from various liquid funds, various debt funds that they had invested in. Now this put some pressure on the schemes or the money available with these schemes. For this, we need to understand what is the structure of a debt fund. Where does the money go when you invest in a debt fund? Basically, the money in the debt fund is used in what we call the lending borrowing. That means when I invest a certain amount of money, say 1 lakh rupees in a debt fund, the fund manager takes this money and he lends it to different businesses. He lends it for their working capital needs, for their capex needs or whatever. And he charges them an interest, which is eventually paid to me as a return on investment. This is the structure of the debt fund. Now, the lending could be of different nature. The fund manager would be having some amount of cash, probably the most recent money that has come from the investor. He may have some short-term lendings to companies which could be a lending for a matter of days, and there could be a long-term lending that could be in a matter of months or even years. This is primarily reflected in the maculae duration, which is indicated in the fund prospectus. So the maculae duration, for example, in the Franklin Ultra Short Bond Fund is around 6 months. That means the fund manager has given it to different entities and they are going to return the money back to Franklin in about 6 months. So it could be 4 months in some cases and it could be 9 months in other cases. So the average maculae duration is 6 months. This is what it means. Now, you can imagine as the investors were redeeming continuously, the funds dried up eventually because all of the funds invested by the investor are not with the Franklin. It has been lent out to different borrowers. Now, there is a time frame by which the borrower will return the money to Franklin Templeton. Now, the situation becomes that the funds which are liquid or which are already available in cash form with Franklin Templeton have been given out in the form of redemption proceeds to the investor. Now what? Now the fund has the right to borrow some amount of money in order to deal with this redemption pressure. That is 20%. We have the information that already this complete limit of 20% has been exhausted by Franklin Templeton. Still, the redemptions are going on. Now you can imagine as a fund house, the money is not with Franklin Templeton. It is already lent out and the investors are asking for more money. In this situation, there are only 2 possibilities. Possibility number 1, the lender doesn't pay the money because he has already invested it in some of his requirements, like it could be invested as a capex or as a working capital. So he cannot convert it into cash immediately. Now, this particular agreement of lending borrowing can be sold in the open market. but nobody is going to buy this at the same price or at a higher price, especially when there is a liquidity crisis, when everybody is only selling. In that case, Franklin Templeton can sell it at a discount and pass on that loss to the investor. This is what exactly Franklin doesn't want to do. So the second option is it will stop honoring the redemptions, at least temporarily, and this is what the closure means. This doesn't mean that the investor has lost his money yet. It only means it has been temporarily blocked, and now Franklin Templeton will wait till the papers or till the agreements mature. So if Franklin Templeton has lent that money to a company X, which is supposed to give it back in next 3 months, the investor will have to wait for 3 months for that money to come back to Franklin Templeton, and eventually Franklin Templeton will then return that money to the investor. This is how it is going to work. This doesn't mean that this scheme is going to make a loss. It only means that the investor has to wait longer. So what this means is this is more of a liquidity problem than a solvency problem. Now, liquidity problem means there is more demand for the money than there is supply. So more people are wanting to take back their money, but there is less amount of money available. So obviously that cash flow is going to get affected. The second is solvency problem. Solvency problem means that it has turned into bad debts, which is not the case here. It means that if Franklin Templeton gave the money to a company X and the company X doesn't have the money or it doesn't honor the agreement, then there is a solvency problem, which is not the case right now. So what happens now for the investors? All it means is that the investor has to wait. Franklin Templeton is a very old fund house. It has been in India for more than few decades now. So it is having a good amount of credibility. Second, Franklin Templeton is also one of the better fund houses when it comes to debt funds. Obviously, as an investor, you will have fear of losing money. But currently, as per the information available, there is very little chance that the investors will lose money. But for sure, they will have to wait and wait longer than they expected. Now, what is it that is going on in the investor's mind? The investor is very much okay when an equity fund loses money. But when it comes to debt fund, the conditioning of the investor and the thinking of the investor, and to a large extent the reality on the court, is that the money will always be available. But this COVID-19, as they say, is a black swan event because nobody could have predicted it. Nobody knows how to react to this event. And that is why this turmoil is there in all kinds of markets. The equity markets are down, the bond markets are under pressure, oil is going into negative territory, and God knows what. So all this chaos and confusion is leading to such events which are surprising all of us as investors. The only thing that we can all do in this point of time is to stay cool, not to react to this situation, and thereby reduce the losses. I am sure the fund house, its management, there are regulatory authorities like the Government of India, the SEBI, the RBI, all of them have control on this situation, and none of us are going to lose our hard-earned money. But we will have to wait. We will have to be patient because it is a money cycle. The investor gives the money to the fund house gives the money to the industry uses this money to create more money, and all of this takes time. Now, the investor wants his money back in a hurry, but the industry doesn't have the money because it is already invested somewhere. Now you can get the amount of turmoil that is causing all this pain. Please understand that the only solution at this point of time with the investor is to stay patient, wait. The money is there. I don't think we are going to lose money in this transaction, but if we showed the patient, if we just waited, the money will come back. Now, what is ultimately going to happen? Now that these schemes are shut down, as and when Franklin gets the money from the borrowers, it will keep passing on this money to the investor. So all the money that you have probably invested in any of these schemes will be redeemed. It will come to your bank account as and when this fund house receives the money from the borrowers. This is what is going to happen. All these schemes will probably cease to exist from here on. The money coming back to the investor over a period of time. Suppose in case of ultra short term fund, the money should come back to the investors in a time frame of say 6 to 8 months, that is based on the macular degeneration. That is what I think. Yes, there is a issue. There is a liquidity crisis. I don't think there is a solvency crisis. We have to wait. We have to be patient. The money will be there. So don't panic. The COVID-19 pandemic is causing its ripple effects in all the markets. We don't know what is going to happen next. There are few factors that are beyond our control. Equity markets, the oil, and so many economical situations arising. They are completely out of control. The only thing that is in our control is our own behavior. The best thing is not to panic. Just watch what is happening. We will keep you informed. Yes, there is a crisis, but we are not going to lose money as of now. So don't worry. Stay cool. Stay at home. Stay safe. If you need more such videos in future, do subscribe to this channel. Thanks for watching, and I'll see you. Thanks for watching, and I'll see you next time.